Hey guys, Jake Nicolle here. Welcome to today's market stats video. Let's jump right in and look at all the data. So we are looking at November's stats. It's December 1st, which means that we've got all this new market data, and I wake up like a kid on Christmas morning to check all this stuff out, and almost Merry Christmas, by the way. So as we look at this, we can see this is globally. Again, this is all the data looking across Mississauga, Oakville, Burlington, Hamilton, all the way through to Fort Erie, okay? We got a whole bunch of boards that are involved, actually 18 boards worth of information. And you can see right now, we are down $4,000. So from a actual percentage standpoint, if I divide 651, our current number, by 655, you can see that we are sitting at 99.38%. So we are down essentially 0.62% or 0.7% is what we're down. If you were looking at a purchase price of $655,000, it's down to $651,000. That's the average there. If we were to multiply that number by, like, let's say $1 million purchase, we can see that that $1 million house is now $993,800. So it's essentially like a $4,000 to $6,000, $7,000 reduction, depending on what your purchase price is. Here is what you need to know more, because right now you're looking at this, and maybe you're thinking the first thing we thought this morning when we looked at that. It's like, oh man, the market's kind of flattening out, right? Except there's some important other things to look at. Number one, and I'm gonna show you guys this in a second, in Niagara, the days on market has actually gone up from 22 days to 29 days, a full extra week, okay? Sales supply is incredibly low. So what that means is while prices appear to be flattening, there also isn't a ton of sales actually taking place, which means that it makes it hard for us to know how much movement's really happening because no one's really selling, despite the fact that our supply is still very high. We went from 3 months supply of houses to 2.9, so that's not a big change at all in terms of the supply of homes. And a lot of that, if sales aren't happening but our supply is coming down, what does that mean? That means that sellers are just canceling their listings. They're not selling, and those prices that they want to get aren't happening. So we see this reduction in price by a few $1,000s, depending on your purchase price, or 0.7% reduction, telling us that people are deciding not to sell. They're pulling their homes off the market. The people that are selling are taking $4,000 to $7,000 off the price, and they're probably priced quite aggressively. And this is just a reminder, from the beginning of the year, being February is the very top of the market, all the way to now, let's see what that change in price is. So if we go 651 divided by 875, we can see we're down 74% of what we were, which in other words means, let me just make sure I get this perfect, try not to do math on the spot. We're down 25.6%, okay? That's how big the decline is in the actual sales prices. Now check this out, okay, so this is really cool. Now we're gonna dive in and look at some broader data. So we can see here, what we're looking at is this yellow line is Burlington, the blue/green line right underneath it is Hamilton, and then we've got Niagara in gray, and the global stats, Mississauga, like we just talked about, all the way through to Fort Erie is there in red. And as you look at this graph, you can see that everything's pretty much tracking the same, but you can see Burlington took a bigger hit than 0.7%. Burlington's actually down 981. And then if we divide that by the month prior, divided by 1,091, so it's actually down almost, roughly 10%, almost 11%, but 10%. That's a huge decline in Burlington. This right here should tell you something. When you're looking at stats, when you're hearing what they're saying on the news, when you're listening to other maybe influencers or different people talking about market data, it's really important that you ask, well, which market are we actually talking about? Because markets are being hit totally differently, and maybe Burlington didn't have enough sales volume, and that's gonna help us understand that you can see here with Burlington, yeah, there's hardly any sales actually happening, from 134 sales to 120 sales. That could just be, you know, an extra 20 homes that are lower priced homes selling for less money, pulling down the average. Does that make sense? Think about it, right? If the month before there was a bunch of $5 million houses being sold, and then the next month there's a bunch of $700,000 houses being sold, the same ratio, it pulls the average down. So not only do you need to look at the data and go, which market is it in? Like, what is actually happening with this data? You need to start asking yourself, what is really going on with these numbers? Do we know what the average sale price was? How many sales were actually happening? How long were things sitting on the market? How many new listings were coming up? There's a ton in here, and instead of bringing you guys more confusion, I want to share with you what I think is happening. We're in a situation where we know that in December, a few days from now, I think it's the 7th or the 8th, there's gonna be another rate hike announcement coming up. Next rate hike announcement is December 7th, which is just a few days from now. So what's gonna happen is we're gonna see, will the Bank of Canada continue to raise rates to combat inflation, or will they not? And to clear a couple things up, the reason I think we actually do need interest rates to come up a little bit, you can see where interest rates got so low by simply looking at this massive spike that we have in sales price. When you print money and everybody can borrow money as well for free with really, really low interest, we spend more on things because we are optimistic that it'll stay this way forever and we'll be able to afford it at those prices forever. But as interest rates start to climb, remember, 2% interest going to 4% interest is a doubling, whereas 5% interest going to 6% interest is not as significant a jump in monthly payments. So we're experiencing a huge shift in people's monthly payments, especially those sitting on a variable that don't have a fixed. Now, the importance behind all of this for you right now is how do you make decisions, right? You're ultimately watching this video because you're trying to figure out, Jake, should I be selling or buying real estate right now? Here's my take. In this market, we are in a buyer's market where we've got a surplus of supply sitting on the market, not because we actually have tons of houses compared to the number of buyers, it's because buyers are scared right now. We're in a stage where not only are they scared, but we're redetermining who can actually afford to buy houses. So with this information, what I would say to you is this is all relative. When the market was super hot back in February, you would blindly go out and buy for a fortune, and then you would turn around and just trust that you were gonna sell your house for just as much money, if not more, and it was all gonna be good. Now you do the exact opposite. You're gonna sell first. It's not gonna be for as much money as you had hoped. And the thing that I like about that, the thing that is a benefit in a buyer's market is when you sell first, you can then go out and negotiate knowing exactly how much money you're gonna walk away with after the transaction. And that can't be overlooked. That's a really, really important detail. Further to that, not only will you go out knowing exactly how much money you'll have, but you're gonna be in a situation where you don't have to be guessing what you're gonna sell your house for. So I actually really like buyer's markets for those reasons. And the other thing is in a seller's market, everybody looks like a hero. Everybody looks like they're able to sell your house for a ton of money, but it's really just the market determining what your house is worth. Whereas now we can go out and negotiate like crazy. And this is where skill is actually a larger part of the equation than in a seller's market. So right now in a buyer's market, mark my words, skill is a larger part of the equation. So if you partner with more skill, better negotiation, better marketing, better market statistics, better understanding of exactly what you should be bidding on, how you should be bidding on those houses, you will be able to buy things at an extreme discount and you'll be able to sell for still a good amount of money. So this is my take, guys, in the market. We've just looked at the difference. We've seen that we're at about a 0.6, 0.7% shift downward globally from Mississauga all the way through to Fort Erie. And then you can see certain markets have been hit harder. Like here, you can see Burlington's been hit a little bit harder. Let me even just for 1 second pop open Oakville and see how much Oakville has been hit. We can see Hamilton is relatively flat here. We're 748 to 765. That is a change of about 2.3%, okay, downward, so negative 2.3%. And then you can see Oakville here is down 1453 compared to 1523. And that's a shift of about, 4.6%. So 4.6% down in Oakville. We were roughly 10% down in Burlington. And then you can see Hamilton was down a couple percent. So these shifts are all relative to the market that you're in. Know the stats, know the information. Hey, if you guys have questions, pick up the phone, give us a call. We'd be happy to chat with you about it. Understand what your options are. And remember, don't just say to yourself, I can't wait for things to get better, because it's all relative. And I actually think the people that are gonna win, like in every other facet of life, are the people who are courageous when others are fearful, rather than being fearful when everybody else is being greedy, right? So right now, huge opportunities. I'd encourage you to pick up the phone, give us a call, let us know, drop a comment below. What do you think about the market? Where do you think it's headed? Give me your prediction, I welcome it. And I look forward to chatting with you guys in the comments. Thanks so much, guys, for watching this video. Now, if you wanna know, should you be buying or selling real estate 2022 into and throughout 2023, click this video right now. Check it out. Seriously, click it. You're gonna love it. It's gonna be awesome. Click it, click it. Cheers, guys.